Hi, good morning, everyone. Louis Borsellino from Hanover Market. Anthony Borsellino, Hanover Market. Give everybody a wave over there, Ann. Okay. All right. Um, so yesterday, as markets tend to do, they overreact to events, and then there's a counter reaction. The sell-off was short-lived as the events in Paris, calmed down and it didn't have more terrorist attacks behind it. Not to say that they're over, but there wasn't a mass amount of terrorist attacks. So we've had, the attack in Paris now, and we've had the Russian jetliner um, actually being shot down. They said that there was a bomb on it. I don't know. Maybe you can push the U.S. around, but I don't know what these guys are doing, fooling around with Putin. He is not going to, he doesn't care about anything. And maybe getting in a war is good for his economy. I have no idea, but I don't think I'd be getting him pissed off. He doesn't care about anybody. Um, he certainly has no respect for our president. He's said it many times. But anyway, I don't want to get very political on this, but at the end of the day, um, you know, I say this all the time. The markets make corrections, and based on how far we came and how loose the structure was below us, it wasn't a bad thing that we had the market uh, turned down in a correction yesterday. Also, because we had, I think, 6 out of the last 8 days down. Um, there were a lot of shorts into the market, and we have some numbers today. We'll get to that, but tomorrow the Fed minutes are going to be released, so they're going to be hawkish because Janet Yellen said she's thinking that they're probably going to raise in December. So that also is weighing on the market. I think the metals market and the bond market is telling you that that she's still going to raise. There's a good chance she's going to raise, especially with gold down and bonds going down. Uh, and the U.S. equities have returned, right? So we're higher again today. So we have to look at what's going on. But I think that the important thing that this is a good, going back and forth between the levels that we visited. We got to basically 2000 faster than I thought we would, but we got there, and between 2000 and 2060 is a range which needs to put more volume in it. So I think that's another thing you have to look at. Probably, yesterday I thought, I was wrong in the morning. I thought we'd get a two-sided trade. We did, but after we had a 1,000-point rally, then it consolidated, and we made the proper calls in the afternoon, and basically thought we would rally into the close. And I put that post out about an hour and a half before the close. So make sure you stay honest with Twitter and get updated. All right, let's go to share the screen. All right, here. So here's what we have today as far as economic numbers. 7:30 Central, we had Red Book. 7:55 Central Industrial Production. 8:15. These are Central Time Housing Market Index. 9 a.m. E-commerce retail. 9 a.m. 4-week bill auction. 10:30 a.m. Jerome Powell speaks. That's what we have going on in the markets as far as that's concerned. Let's look at the S&P movement overnight. Here's the profile overnight. Let me switch this to some crosshairs here. All right, so we got a high here. This teal line represents a high, 2059 and a quarter. All right. All right. I'm gonna. We have a bull bear zone way above at 2060, but I'm gonna go out on a limb today, and I think this is gonna be an important factor right here. 2049 half, 2049 half to 2050 half to me is going to be important on the downside. We've got an unfinished bottom here, and that's the low of Globex at 2045.75. All right, we have some single prints here from 2044.75 down to 2043. All right, and then we have some more single prints here at 2040 half to 2040, and we've got this one remaining one down here at 2033 and a quarter. So, all this yesterday, like I said, this is a huge buying tail. All right. So here's the buying tail from the opening. We retraced about half the opening range, and then we had consolidation, and then in the afternoon we took off. So, I think that all the way down from here, 2014 half, up to Globex highs are in play. And then we've got some single prints at 2016 a quarter, up to 2063 half. And these are all, and then we've got these tops up here at 2077 half and 2082 half. So I think it's, the market basically is in a range, and the range is very big, which is good, right? That's good. Big ranges are good. All right, bull bear zone, we have at 2060. This should not be here. All right, and then we have higher value at 2040 half, point of control at 2025, and 2019 is the bottom of value. Okay, this teal line shouldn't be here either. All right, so I've just covered it. I mean, we're going to be in a range from 2060 right now, I think, down to 20, to 2000. I mean, that's the range, and we're going to get some consolidation in there. And unfortunately, we're going to be in an environment that has a lot to do with news and a lot to do with what the Fed does with its rates. Okay, let's take a look at the 5-minute pivot here. All right. So right here is 2044.75. We're trading right now. It's in a buy. It has to take out 2044.75. All right. Starting out the day, the Russell is in a sell at 1158 half. We've got the Dow in a buy, 1747.474. And I've got the NASDAQ in a buy, testing their pivot right here at 45.72 half. So if you were with me yesterday afternoon, I put a lot of things out, and I said, look at this CCI, everything's in a buy, green, and I think we're poised to settle, to rally into the close. Those are the things that the mom indicators will help you, stay with trends when there's a trend. And I know we look at those things and say, how do you stay with it? There's no retracement. But you know what? This is these things measure relative strength. Right now, it's telling me the market is mixed for sure. So you better stay on the with your hands in the pocket off the mouse until we can find some sort of direction, because I think you're going to get some chop on both sides. All right. So I wouldn't get married to a position. That's what I'm saying. Okay. Let's talk about oil. Uncle Jed's gold. Yeah, you guys aren't old enough to remember the Clampets, huh? Anthony, you remember the Clampets? Beverly Hillbillies?
Yeah.
Come on. You used to watch them?
No, I didn't watch them. I remember you talking about them.
You remember me talking about them? What about the Brady Bunch? Remember the Brady Bunch?
Yeah, I remember the Brady Bunch.
All right, so I knew Greg Brady. I was friends with him. Barry Williams. All right, so here we go. I brought him to the floor of the exchange. This is incredible. I brought Barry Williams, Greg Brady, to the floor of the exchange, and he caused more commotion than the president's being on the floor. It's incredible, because I guess our whole generation was raised on the Brady Bunch. Anyway, bull bear zone for oil, 41.93. I've got we're trading right, trying to get outside of value at 41.45. Point of control at 40.70. I'm sorry, the value area low at 40.70, and 40.22 is the point of control. Try as they may, try as they wish, try as they lead. I think oil's going down, and yesterday, because of we've been going straight down. I think you got to have a little bit of breath. Okay, so we got a little bit of breath going on. Here is gold. the hedge against inflation, which there is none. So that's what the price is dropping. The hedge against war and instability. One day rally and heading back down. So this is telling us that those rates are coming. The hike is, they believe that the hike is coming. And once we get that, I think the gold, if we do get a rate hike, gold's fate is sealed and it will be going down to about 1,000. Now, understand, and if anybody wants to argue this with me, gold has nothing to do with supply. It's a demand product, and it's who wants to own gold when they want to own it. Okay, so understand it has nothing to do with supply. You can't consume enough jewelry to make a shortage of gold. There's nothing that's going to happen, and they don't use it enough in electronics for gold to become anything but a demand product. It's used. It's been the metal that currencies were built on. So understand it's a demand product. So we're trading below value. Bull bears on 1082.90. I'm staying with my conviction. I think gold could go down to 1,000. All right. Barring that there is no more terrorist attacks and there's not some toppling of financial institutions and acceleration of the topping line. All right. Now back to bonds. I'm sorry, I didn't put the value areas in. I actually have them on another platform, but the chart is not running yet. But I will show it to you. Oh, I can't show it to you. All right, here we go. So oil or bonds are actually trading below value, and they spiked up yesterday to let me get the. I can tell you these things, and maybe I'll put them in while we're talking about it. But all right, come on, fire up. Here we go. All right, hold on a second. All right. I'm having trouble with these charts loading. Hold on a second. Anyway, I can tell you gold is trading below value, and it is also pricing in a Fed height rate. So this was yesterday's point of control. Yeah, I'm having trouble with this chart loading. Okay. All right, I will reload that chart and I will get it out on Twitter for you. So, but look, bonds are a hard animal to trade because the Fed is doing so much intervention. So you have to take that with a little bit of grain of salt because when you have it's not even a function of supply and demand anymore. It's the function that you have a lot of intervention from the Fed, and it's whether they're going to come off zero or not. So that's an important thing that we have to keep in mind. All right, let me just recap the SPOOs for you. All right. So always remember that the important thing is that you have to take out the Globex highs and lows. I think that the market is mixed this morning. We got mixed signals with the sisters, with the Russells in a sell. We've got. I'm really having a rough time here this morning. Let me change this pointer. All right. Okay. All right. That should help me out right like that. I should just take advice from Anthony all the time. All right. All right, here. So remember that the high is right here at what is that, 2059 half. We're kind of trading at 2053 even. I think 2049.5 is going to be key. If we get below that on a 2049.5, we're going to go down and take out the lows and maybe take a shot at retracement over here into the area where we kind of had loose structure from yesterday afternoon. All right. Right here, if you see all these single prints over here, I mean, all this consolidation. So that's a really high volume node. So I would expect that the market would have some, could trade down into this area, 2042 area, and find some support. So that's what I'm looking for there. Sorry that I've been disshuttled this morning, but sometimes that happens. All right, let's stop sharing. All right, so Fed minutes tomorrow. I think we're going to get some volatility on both sides of the market, based on the way the profile is shaped up. Also based on the move that we made from yesterday. So I think that markets tend to overreact and then they correct themselves. So I think you're going to get trades on both sides and be a quiet morning tomorrow until the Fed minutes are released. All right. Any questions, Anthony?
Yes.
Yes.
So after 11:30 yesterday, the market basically went straight up. What is your strategy for getting long?
Well, all right. So after 11:30 yesterday,
Eastern time.
so 10:30. So if you take a look at yesterday and you look at the market where the consolidation happened. So if I go back and let's see if I can pick it apart from yesterday. All right. So let's look at this here. All right. So we knew yesterday the bull bears. Well, actually, we knew that the low of the value, I believe, was 2023 yesterday. Right. So that's where the war took place. Right. We went up and made a high at 2030. Okay. And then we came back down, and then we had most of the consolidation. If you see how this market consolidated, right? So, we had the big buying tail. We came back down, and then, I put out some charts in the day showing where all the consensus trade was. So if you see that this is where the consensus trade was happening between the lower part of value, and I kept trying to get out of value and then getting back inside of it. But if you look at the morning, it just, because you got bracket B, C, D, E, and F are basically, the first half hour or the first, 2.5 hours of the day. And so, they waged the war right here, the bottom of value. And then after that, and yesterday afternoon, yesterday, all the pivots turned positive. Okay. And then the only one that went negative was the Russell, right? And so remember on Friday, that happened the same thing. The market sold off and then it consolidated, and there was one index that was positive, and it was the NASDAQ. So what I do is I kind of look like, you got 3 against 1. I look at, then I go and I look at the value areas. I look at old highs and old lows. I didn't put this line here by mistake, right? I knew what I was doing when I put this line on Friday. So I kind of look and see where I got, see how the profile is formed by 4 letters here across. So when we made this formation and bracket G didn't complete it, okay. Oh, I'm not showing that. Oh, why'd you? Okay, let me go back there. All right. A lot of talking went through, right? So at the end of the day, we waged a war yesterday. We went up and made a high of 2030, and we came back down, and we went below, right? Well, we came back down to here, right? So 2019, okay? And the low of value was 2023, okay? So we waged the war right in here and between 2026 and 2023, okay? And now you take a look at these letters, B, C, D, E, F. That's the first 2.5 hours of the day, okay? They all tested the low, and then F failed here at E, okay? So E didn't go lower than B. F failed at E. All right. Okay. And then G couldn't take out any of this consolidation. I mean, these are a lot of TPO counts down here. Right. And then the market rallied from there. So what had happened, all the pivots turned to a buy. All right. And the market rallied. And then to me, it's just at this point, now you start picking, you know, we had single prints here, which we filled in the morning. But at the end of the day, when all the pivots turned to be a buyer, I'm looking at a formation like this and saying, okay, well, as long as these brackets don't make take out the lower lows, this is now becoming an acceleration. We have another platform which you're going to get exposed to when we start the trading platform. I mean, the trading funding, and it showed us the consolidations or the consensus trading, and then there was a breakout above the consensus. Okay, so then we had only the Russell was the only one that was not in a buy, and when the Russell went to a buy and we started taking out, see these single prints right there, we went up there. That's when, I basically an hour before the close, I said the formation's telling me that we're going to rally into the close. And we did. We rallied into the close. I thought that 20.55 and a quarter was a possibility, but I thought it was a little overdone. And we did that overnight. So I was looking for the market to go here, right? So we talk about what I look for, right? Here, opening of bracket K, we had a bunch of single prints. So to me, this was a target right here, okay? So yesterday, or when I was putting out 20.55 quarter, here's what I was looking for right there. But I kind of thought that the market was overdone too. I wasn't really convicted. I said maybe 20.55 quarter, but the market would rally into the close. So those are the kind of things you got to look at when you're, talking about. So, why is value important, and why is the value area important, and how is the value area forming up to their day? Remember, this is dynamic. We were forming, the value area high and low. This is a dynamic undertaking here. This is not, something that's predetermined. So, the buyers and the sellers had a lot of consolidation. But what did they have? Basically 2.5, almost 3 hours of consolidation in a 4-point range. Maybe a little, maybe from 5. You could say 19, but not really. It kept trying to get back inside value. So that's why that was important. Does that answer the question? Okay. Look, the pivots to me, which we've designed, are important because they not only do they give you an idea, what's going on with the flows, the money flows, but they're important because they give you the ability to look at the market objectively, and you'll see when the market breaks, or it looks like it, like you see, because everybody watches the dome and the volume, and you're looking at that, and when you see the market get into extremes, and one of these is is disagreeing, it's pretty evident that extreme is going to be an exhaustion area, because I don't care what anybody tells you, these things have to move together, right? Because who's moving them, right? Big institutional players are moving them, not us. We're peons in this scale of things here, all right? The big institutions are putting it in, and how do they do it? You think they got a guy over there that's picking stocks? No, they got computer programs that go to buy, and they got computer programs that go to sell. And so we got to, our job to try to just jump on that wave that they create. So hopefully that makes some more sense to you guys. All right. Any more questions? All right. So I can stop sharing again. All right. So you're going to get some volatility today. And then because of the Fed minutes tomorrow, the Fed minutes are always so confusing to me, because we know what she said, right? We know what she said. So, all of a sudden, when the minutes are released, there's some little sentence in there that's different. I don't know. We know two things for sure. The Fed is data dependent, and they want to raise rates. Okay. So, just think about all the bad news that this market has absorbed, and we're still trading at the levels that we're at. I mean, we haven't, in 2 days, we get 2 days like yesterday, we're trading higher on the year, all the indexes. So that's exactly, the way I look at it. So, you have to stay in front of the curve. But you cannot, you can't get caught flat on your feet. All right, everybody, have a good day trading, and we'll talk to you tomorrow.